Hey, good afternoon, everybody. Hope everyone's doing well. Hope everybody's, making the best of this time in our lives where we're actually being required to stay in our homes and social distancing ourselves from this coronavirus pandemic. I wanted to make a quick video today regarding, where are the safest places to keep my investments right now during these tumultuous market volatility periods. Where can I put my money, still earn a fair share of interest on it, and know that it's protected from any market losses? And so really there's only about three options when it comes to investing your money into a safe vehicle. You've got your standard safe money instruments like money markets and certificates of deposit, and you have what we call mortgage-backed securities, or basically they're a type of bond that's backed by the government, and it's tied to the mortgage business. So not sure how well those are going to do. I know that it is backed by the government, but with interest rates and things going to all-time lows, a lot of these safe money vehicles that we would normally go to are not really going to give us a safe return. They're not going to give us the return we need to rely on during this period of time. They will be safety. They will offer safety, but they're not going to offer, the earnings that we would hope for. So the third option would be a type of fixed annuity. And so here at Annuity Association, we've had a lot of demand lately over the last couple of weeks on specifically safe growth annuities. So fixed annuities, there's several different types, but they can offer a pretty decent rate of return while having no exposure to market volatility or no exposure to market losses. The insurance companies that offer these products offer a guarantee that your principal that's invested is protected 100%. So if the market is going down, your money will not be impacted by it. But I wanted to take a moment and just kind of go over these options with you. And, I did some homework before this just to see what the rates were currently being offered on bank CDs. And as of March 2020, I'm going to go ahead and share my screen here. We've got the, according to bankrate.com, right now, I hope everybody can see this, as of March 2020, the 1 year average, the highest right now is 1.85% offered by Goldman Sachs, and then the 5 year is at 1.90%. So not bad, definitely better than an interest on a checking or just standard savings account. But going into a CD, you're going to be FDIC insured up to $250,000. And there's a time obligation when entering into a CD. So if you go into this 1 year or the 5 year, you're going to be asked to leave your money in for that period of time. And that's the interest rate that you'll be paid as long as you hold your end of the obligation up, which is staying in that contract for that period of time. So not bad there. CDs are definitely an option for those looking for safety right now. However, there are better options, and obviously I'm a little bit biased because I do represent annuity products, but annuities are going to be a place that's going to give you the same safety as well as a higher opportunity to earn interest with no market volatility or market risk. So I'm going to pull up a report now to show our recent fixed indexed annuity report. So let me make sure everybody can see this. Okay. So this is just a report we pulled on the 17th, so March 17th, which was Tuesday of this week. And what you're looking at here is a top 25 report of the highest fixed indexed annuity crediting methods. So in a fixed indexed annuity, there's multiple different types of crediting strategies or crediting methods. And depending on the crediting method and the index that the crediting method is tied to, that's what determines the performance. So this is a report showing the top 25, and this is a report showing the last 10 years. So from March of 2010 to March of 2020, this is showing the different carriers and the different crediting methods that have came in as far as being ranked in the top 25 from an interest credited perspective. So if we look at number 1, we have Fidelity and Guarantee, which is their F&G Power Accumulator 10 product. And the crediting method is the CIBC Balanced Asset 10 biennial. So it's a 2-year product, meaning every 2 years is when that's the period they look at, and then they credit the interest. And it's a point-to-point strategy. So if you were in this specific product during that time period from March of 2010 to March of 2020, your average return would have been 9.94%. That's a really great rate of return, while also having guarantees backed by the insurance company that you will not lose a penny from market volatility inside the contract. Now, this is a 10-year term contract, so it's a longer period of time than your average CD, but these same products are also offered as low as a 5-year period. There's a really good 6-year period product on the market right now that just came out. There's 7-year periods. So depending on how long you're looking to protect your money, the longer that you go, same with the CD, the longer that you go inside of a fixed indexed annuity, the higher opportunity there is for credited interest. So 9.94%, so just under 10% from the F&G Power Accumulator 10. We also have a 9.3 from another F&G product. F&G has really had the strongest, in my opinion, the strongest accumulation focused products over the last handful of years, and these Power Accumulators and Accumulator Plus series products have been really the top of the line when it comes to accumulation from a safety and no market volatility perspective. The lowest ranked one on this top 25 list comes in at 7.43%. So there's 23 other options right in between that, all the way up to 9.94%, that if you were invested in this product for 10 years using this carrier and this product and the crediting method, this is the type of return that you could have expected. Now, obviously, historic performance does not, determine future performance. But if we look back 10 years and we see what we've gone through the last 10 years, this is the type of return that could have been had inside these products. So we're also going to be sending this report out by email. So I hope everybody has gotten some value from this. I wanted to make a quick video. If you're looking for safe growth, if you're looking for principal protection, if you're looking to secure a portion of your retirement nest egg from these volatile times, take a serious look at a fixed indexed annuity. Lastly, I will go into our system here and pull another report. If you're not looking to go into a fixed indexed annuity and you're wanting something that's more of a guaranteed interest, from a guarantee perspective on the credited interest, we also have what we call a multi-year guaranteed annuity. Now, a multi-year guaranteed annuity is very similar to a CD in the sense that it offers, safety. It offers a guaranteed rate on the interest as long as you keep your money in the account for that period of time that's stated on the contract. If you keep it in there, they're going to pay you that credited interest on a guaranteed basis. And lastly, it also offers the same principal protection we were just talking about, where this money is not exposed to market risk or market volatility, and you can sleep more at night knowing that this money's safe. So I'm going to go in here and we're going to sort this out from an A-rated carrier perspective. So when we look at these types of products, we prefer to go into something that's A-rated or above. But there are some pretty strong B++ rated companies that have a pretty good track record lately that we would probably take a look at if you're looking for a slightly higher interest rate. So this is a multi-year guaranteed annuity, which is basically equivalent to a CD. Okay, it's going to offer you safety, it's going to offer you principal protection, and it's going to offer a guaranteed credited interest rate for that period of time that it's guaranteed for. In addition to that, instead of it being FDIC insured up to $250,000, each individual state in the United States has what they call an insurance guarantee association. And basically what that is, and the long story short, is in order for an insurance company to do business in a given state, they have to be approved. And in order to be approved, they have to enter basically a reinsurance pool, which is they go into an association that has other insurers operating in that state that are also in that association. And basically the agreement is, in the event that an insurer were to go, belly up, which it does not happen very often, but in the event that happened, the Insurance Guarantee Association for that state, for example, here in Florida, they would cover up to $300,000 of investment inside of an annuity. So instead of FDIC insured, it's still legally insured, but through an Insurance Guarantee Association, which is approved by the state. So each state varies. I think they're usually around 250,000. Florida happens to be one of the higher ones at 300,000. So here's a table chart here of the various multi-year guaranteed annuities. The top one right now is a 3.1% guaranteed interest rate, 3.1% guaranteed yield for 5 years. We've got a 7-year at 3.05, and then a 5-year at 3%, and then they start to make their way down. So pretty strong product, 5 years, 3.1%. We just looked at the CDs. Let's go back to that. We just looked at CDs according to bankrate.com. The top 5-year crediting interest rate that's guaranteed is by Goldman Sachs at 1.9%. So you're getting a whole, 1.2% more on your money inside of a multi-year guaranteed annuity that offers the same security, the same guarantees, and that it's legally backed by an entity that will cover, any type of default. In this case, an insurance company defaulting, you would be covered up to $300,000. So if you have any questions, if you'd like us to run a report for you specifically, you can give us a call at 1-855-866-3659, or you can visit our website at annuityassociation.com. The top right-hand corner, click the Find Your Annuity button, fill it out, and we'll get back to you in a timely fashion to see how we can help find the right annuity for your specific needs. Hope everybody stays safe out there and enjoy the social distancing while it lasts, and everybody take care of one another. Have a good day.